two very bullish headlines I want to share with you guys before we dive into this video and talk about what is likely to happen this upcoming week, not only obviously with AMC stock, but as well as the broad markets, economic data that is coming out, so on and so forth. But Unusual Whales tweeted this out about 5 minutes ago. Bank of America has suspended equity trading with hedge fund Sagenti Capital Management over concerns related to its wagers on large stock sales, according to Bloomberg. And if Bank of America is doing this, just imagine what JP Morgan is doing, or Goldman Sachs, that specialize in equity trading, in facilitating market maker activities, right? Being a broker dealer. Bank of America, yes, they do participate, but not to the same extent as other banks. So if that goes to show exactly what is going on under the surface, it's not so pretty for the hedge funds. Let's just call it that. Now, this is a very bullish headline, and I think this might, attribute to a positive week this upcoming week for the markets, if we do have one. Keep in mind, we had 7 straight weeks of a downturn in the markets. This last week was the first positive week. So we were almost 2 months straight down, negative, for 2 months in a row, every single week. That's wild. So even to see an even bigger rally here would not surprise me. And this could be very bullish for some of the trades that we do have on right now, like some of the oil shorts, could be very good. So if you guys want access to that, link down below in the pinned comment. But most importantly, make sure to get yourself those free stocks with Webull, Moomoo, and Public down below in the description of this video. So this is a great source. And, check this out. Follow them if you guys want. Unusual Whales, fast stock market news. Between these two guys, you'll get all the news your heart desires without paying $20,000 a year for a Bloomberg terminal. But it says Putin informed them that Russia was ready to increase exports of fertilizers and agricultural products if sanctions are lifted. Putin told Macron and Schultz that Russia was ready to resume dialogue with Ukraine. IFAX cities, Kremlin. So this is obviously, it looks like a foreign news outlet, but that could be very good. That could be very good for the stock market. That could be very good for inflation. That could be very good for the price of oil, and to tone down the likelihood of seeing a prolonged recession, because at this point you're going to see a recession. When oil is over $100 a barrel for 5 months, which it has never done this before, you're going to see a recession. Every time oil has went over $100 a barrel, even briefly, you have seen a recession. Every single time it has happened. Look at the peak back here, April 2008. It was not so pretty after that, right? Obviously, oil fell through the floor after that. Once a recession comes, that's what tends to happen to the price of oil. But you were only above that $100 barrel mark for about 3 months. You've been above that for 5 months now. So the situation is definitely pretty bad for oil. And if oil does come down, that's going to be very bullish, very, very bullish for the overall markets, as well as if the war in Ukraine ends, just in general, to take the small chance, but still a chance, of a nuclear war or a World War III or just a larger conflict in general off the table. That's going to be very, very bullish. So those were 2 very bullish headlines I did want to point out. The one Bank of America headline, that's more bullish for AMC, for what we are trying to accomplish here on this channel, as well as just overall, right, to shed the light on what is actually going on. So you guys are really just aware of it, and then that Russia headline could be very, very good. Now, nonetheless, let's talk about what is going to be happening throughout this upcoming week for AMC stock as well as the broad markets. And I do want to start off with AMC just briefly, and it's important for you guys to know trading on Monday does not exist. There is no trading on Monday. So the 31st is going to be Tuesday. That is going to be the first day of trading because of the Memorial Day weekend. That's why we are closed on Monday. So we have Tuesday, Wednesday, Thursday, and then Friday is the 3rd. And that's when the executive order should go into effect again. And I do expect Friday to be pretty bullish because of that. I do expect a decent day, but I expect this next upcoming week to be very bullish. It wouldn't surprise me, though, just for full transparency here, to see a 30% rally, and then a 10% drop, and then a 20% rally, and a 5% drop, and then the executive order comes. Maybe you see a bigger rally, but what I'm really looking forward to is the executive order getting implemented, and then likely staying implemented, because we have not seen that yet. And if you're looking forward to hundreds or thousands of dollars per share, especially in this market environment, well, you're in the right market environment. Liquidity is stretched. Obviously, hedge funds, they're going to have a hard time servicing those margin calls. Like, it's going to be a very difficult thing to do. And even more specifically, just with AMC stock, the volume has been really, really low. So you've seen an 19.25% day on Friday with 89 million shares that traded hands. We could go hundreds of millions of shares. If not, when we do peak out with the Moass, you're probably going to be looking at a couple billion shares, right? To see the float trade hands 5 times during the peak, which would be about 2.5 billion shares trading hands in a day, that's kind of what could happen, right? That's what you see happen in other stocks as well. You'll see the float trade over like 5 times in a single day, and that's usually always going to be the peak. I don't know if it's going to happen this upcoming week or next week. You're going to go to those really high levels. I do think hundreds, thousands, that's possible. Not this upcoming week, but really next week if the executive order does stay in effect. Usually when the executive order does go into effect, like we've seen in June, you had a 35% rally. The following days after that were very, very bullish. So that next week, not this upcoming week, but next week, that's going to be very important for AMC stock as well. And I think it's pretty important for you guys to stay up to date with all of this information, because even on top of that, even on top of liquidity conditions the way they are, you're seeing a lot of option activity, and retail is definitely here to stay. A lot of puts that are in the money. If you guys are unaware, essentially when puts go from out of the money into the money, market makers have to short stock onto the open market to make sure that they can essentially break even, if not make a small profit, by facilitating your trade, by being the market maker and providing liquidity. So that pushes the stock down. It pushes the price of the stock down the same way a gamma squeeze pushes the stock up. Now, when the stock does go up, when it does start to catch a bid or see a gamma squeeze, obviously calls go from out of the money into the money. But at the same time, if there's a lot of puts, the puts are in the money and then they run out of the money. So it's 2 forms of buying power. And that's what is really different over the next couple of months here. You can see for June 17th, about 14,000 calls that are in the money, 217,000 calls that are out of the money, but 87,000 puts that are in the money. That's different. You really don't see that large of a number on these expirations. You usually don't see a lot of puts like that. That are in the money, especially for July as well. About 24,000 calls that are in the money, 285,000 calls that are out of the money, 45,000 puts that are in the money, 55,000 puts that are out of the money. So potentially you're looking at tens of millions of shares the market makers would have to buy if even half of the calls go into the money, as well as even if half of the puts run out of the money. So potentially a lot of additional volume that could come in. And especially if the executive order does stay in effect, I think you're going to see, like I said, that overall bullish reaction. But I think you're going to see a lot of FOMO on top of that, because if you do start to see margin calls and the markets do start to fall, and retail stocks are, doing well, then I think you're going to see a lot of investors try to trade into stocks like AMC. And AMC is definitely, out of all the retail, quote unquote, meme stocks, AMC is definitely the one that looks the best just as an underlying investment, right? If you were going to invest, like seriously invest fundamentally in any of these retail meme stock companies, it's going to be AMC. If it's not, I got to question the investment decision there. But nonetheless, that's what you guys need to know as far as a potential gamma squeeze. Like I said, I do think it's going to be a very bullish week overall. If you guys have not seen the last video that I did just put out, AMC stock on Friday seen a lot of very big option orders that came through at the end of the day for July 15th as well as for June 17th. The $13 strikes caught a big bid, 375. What the heck? Oh my god! Oh my gosh! What did that do? I kind of messed that up a little bit, but we'll pull it back up. The $13 strikes for July 15th, you're seeing 3 orders, one of them for $82,000, the other one for $225,000, and then the last one for $375,000. And these came in about 20 minutes towards the end of trading. This last order for $375,000 actually came in 2 minutes before trading ended. So it's very unlikely you've seen like a flip, like this was probably a trade, or really it had to have been a trade that they got into, willing to hold over the weekend, willing to hold likely over the next couple of weeks. So that is really, really good in and of itself. Short interest of free float, extremely high, 23.26%. You guys know the deal there. Current short interest of free float, current shares that are sold short, I should say, of almost 120 million. Cost bar minimum, 3.34%. Cost bar average, 12.79%. Cost bar max at about 15%. So also looking good. 100% utilization days cover at 3.5. Shares out on loan, 173.61 million. Free float out on loan, 33.68%. So there is about 11% of the float in addition to what is sold short that could be sold short against us in the future, or it could be returned, and that could also be a very bullish thing. But overall, short interest has not been this high in a very long time. I think you got to actually come back to May 28th, 2021 to see short interest this high, and that was obviously right before the June rally, and the short interest back then was 24.49%. Not a lot of the float was actually covered then, and I do think it was because the executive order did get implemented, and then just as fast as it was implemented, it was retracted. But like I said in previous videos, I do think there's a lot more incentive now, and I think it makes a lot more sense to keep that in effect. And I think given what we're seeing, given the shorts that continue to pile on, given the bullish enthusiasm in the markets, so on and so forth, positive earnings, I mean AMC beat all estimates, that it could be much bigger this time around. Just my personal opinion. You guys don't have to agree with that. I really don't care if you do or don't, but I think it's going to be very exciting nonetheless. Now, as far as the economic data that is coming out for this week, Wednesday, Thursday, and Friday, those are going to be the key days. But on Monday, this is what the markets are going to react to for the futures, for the pre-markets. This is likely going to be the main focus of the live stream Monday night. It will not be Sunday night. It will be Monday night. So come join us on that. We'll go over the futures. And Fed Waller's speech. He does have a speech at about 11 in the morning. Markets, like I said, they are closed, but it will affect the futures and pre-market. So that's basically all you have for Monday. Now for Tuesday, you do have S&P Case-Shiller Home Price Index, Chicago PMI, some bond auctions, but nothing too crazy there. And then on Wednesday, that's where you start to heat up a little bit more. You have some mortgage data coming in here at about 7:30 in the morning. Bank of Canada interest rate decision, that could be relatively important if there is a big change, right? If Canada were to cut rates dramatically, that would be like, what is going on? We might freak out. Obviously, they are our biggest trade partner as well, just across the border. In my case, I live in Michigan, so just across the pond. So could be pretty important, and that comes out at 10 a.m. Also at 10 a.m. as well, you got Jolt's job openings, ISM manufacturing PMI as well, Dallas Fed Services revenue, Fed Williams that speaks at 11:30 a.m. And then you do have Fed Beige Book, as well as Fed Bullard that speaks at 1 p.m. also. So these things are going to move the markets. Just be fully aware of that and be prepared for that. The volatility is here to stay to the upside and potentially to the downside. Now, 8:15 a.m. on Thursday, you do have ADP employment change for May, initial jobless claims, unit labor cost quarter over quarter, non-farm productivity, jobless claims, 4-week average, continuing jobless claims, factory orders, some gas stuff, a lot of gas data that's coming out, more Fed auctions, Treasury auctions, Fed Logan speak, and Fed Mester speaks. All of this up until 1 p.m. If you guys want to track this for yourselves, you can use investing.com's economic calendar, or you can use Trading Economics economic calendar. Either one, just look up economic calendar and it'll come up, and you can kind of get a better feel and watch these events in real time, more so than not. If you see the markets reacting before you see a headline, if markets just rip up or rip down, you can always look at this and see if there's something that might be affecting as far as economic data or some kind of information that came out. 8:30 in the morning on Friday, unemployment rate for May, non-farm payrolls for May, participation rate for May, average hourly earnings, hourly earnings for year over year and month over month, non-farm payrolls for private, manufacturing payrolls, government payrolls, average weekly hours, S&P Global Composite, ISM non-manufacturing PMI, that's going to be very important, and then Fed Brainerd that also does speak. Now, at this point, I do think a lot of potential bad news is already expected, and I do think if we do get more good news, that could add to a lot of this rally. So, no, I don't think the bottom is in for the overall markets. I simply don't. This is a bear market rally. This is like we've seen after, a couple Fed meetings ago, 2 Fed meetings ago, where the markets went just quite parabolic. And let's see, from 380, you have rallied. Sorry, I messed that up, guys. Oh, I messed it up again. I'm terrible. You've rallied about 9% from the lows at 380. So you're still down massively on the year. And I think ultimately we bottom when the markets realize the Fed has put us into a very deep recession. Oil is, putting us into a very deep recession. And maybe something breaks, maybe a bankruptcy, something along those lines. And then the Fed ultimately U-turns and starts accommodating the markets more, maybe later on in this year, maybe around September, October, November, December, in that time frame. That's when you bottom. That's when you want to be, have all your chips on your positions, right? You want to have your positions built out by then. And I think this is the greatest opportunity that you're probably going to see in the next 5 to 10 years to build long-term wealth by buying companies that you like for the long term. So that's basically going to be all for this video. Some quick looks at the technicals. We need to break out above 15. That's going to be the next key level. After that, 50 and 100-day moving averages at about $17 a piece. If we break out above that, the next key level of resistance is going to be the 200-day moving average like it was back here in this March rally, and that's sitting at about $27.24 per share. So that's pretty exciting. If we can get up to there by the executive order, if that does go into effect, the 3rd on Friday, if we can be roughly $20 to $27, very bullish. And even 100% day or 200% day is going to put us back to pretty much those all-time highs. So that's that. RSI pretty neutral at 52.90, so nothing too crazy there. And the MACD is bullish, but also nothing too crazy there. So there's still a lot of room to rally here, and that's exactly what I expect in this upcoming week. We'll go over a price prediction and all of that, coming out. Shoot, it'll likely have to be Sunday or Monday, even since markets are closed on Monday. But nonetheless, stay tuned. We got a lot to talk about over this weekend. We're going to talk about stocks that I am buying for the long term. We're going to talk about a lot. So hit the like button, subscribe to the channel if you guys want to stay up to date on all of that information. Thank you guys for watching. Get your free stocks down below in the description. If you guys want access to all of my trades in real time, link down below in the pinned comment. You guys take this time, enjoy your families, all of that good stuff. Go to the beach, go tubing, go surfing if that's what you're into. But just enjoy your time. Enjoy your time. It's been a very rough couple of months in the market. So nonetheless, that's it. I will see you in the next one.